All right, welcome everybody. Thanks for joining us for our preparing and filing form 720. This relates to compliance and specifically to the requirement for ICRA plans to file PCORI fees July of every year. I'm super excited to welcome Trey Tompkins onto today's call. Trey is a subject matter expert in this, and we partner heavily with his company, Admin America, for a lot of the compliance requirements around self-funded plans, which ICRA is a part of that. Trey's going to walk us through exactly, what is PCORI? How do you calculate this? How do you actually file it? A lot of people get overwhelmed by compliance in general. So we're going to walk through actually how simplistic this is. We're going to debunk some questions and myths around PCORI. And in the end, if this is something that you don't want to do, we can also walk through how Admin America can do this for you. So, Trey, welcome. Super excited to have you on today. Tell us a little bit about yourself and kind of how long you've been in the industry.
Yeah, thanks, Mary Margaret. I'm real happy to be with your clients today and just really hopefully dispel the complexity of completing the Form 720 related to the PCORI tax. So I've been at Admin America for almost 30 years. It'll be 30 years at the end of this summer. And my job here is twofold. I manage the leadership team of the company, but I'm also the benefits attorney that supports the brokers and the clients that we work with. So I do quite a bit of continuing education training for insurance agents and other people in the benefits community. And sometimes I just get asked to do additional compliance things for clients. And PCORI was one of those things that came up several years ago, and we do quite a bit of the reporting for clients. But quite honestly, it's something that I feel most clients could do for themselves. And my intent with the seminar today is really give your clients confidence that if they want to do this and not have to pay a third party to help them, they can do it. And we're literally going to walk through it step by step by step and try to give everybody that confidence and arm them with that tool. And obviously, as you said, if they don't want to do it, we'll help them do it.
We got the easy button. I
We
like
got the
that.
easy button. That's right.
Well, let's hop right in. Agenda kind of that we're walking over today or walking through today is, what is the PCORI fee? Especially for folks that are maybe new to ICRA, new to self-funding. This may be an acronym they have no experience with at all. We're then going to walk through, who has to actually pay this fee, how do you actually file the Form 720. There's a counting aspect to figure out how you come up with the number that is owed. We're going to walk through exactly how you calculate that. And the big one, bullet point five here, is where we're actually going to look at how to complete the Form 720 on the actual form, which, by the way, was released over the weekend, which is really convenient because we all know that these are due July 31st. And then we're going to kind of walk through filing instructions, common mistakes to avoid, and then I've got a little bit of Q&A at the back end of this, but really just a reminder, this is meant to be painless. In the end, this is meant to empower you with more information, but we totally get it. If this is not something in the end that you want to take on or become a subject matter expert at, we're going to walk through exactly how you can have Admin America do this on your behalf. So hopping right in, what is a PCORI fee?
Okay, so PCORI stands for Centered Outcomes Research Institute. And that institute was something that was created by the Affordable Care Act back in 2010. And what the institute does is research the effectiveness of different medical treatments. And there really hasn't been much that's come out of that and that you would be familiar with in the real world yet. But it's something that is funded by this designated tax on what is essentially insurance and group health plans and things like that. So when you might hear interchangeably the use of PCORI tax, PCORI fee, PCOR, it's sometimes shortened to, but it all just refers to this fee that was created by the ACA back in 2010 to fund this research institute. So that's what it is. One of the confusing aspects of it was It was designated to expire in 2019 when it was created, but like so many taxes that we get, it was extended for another 10 years. So now it's currently set to expire after 2029. We'll see. It's one of those things that likely might get extended again. But don't leave today saying, well, after 2029, we'll never have to deal with this again. Who knows? Just stay tuned, right? So there's a Form 720 is the way that this gets reported to the government. And that's where we're going to spend a lot of time talking about today.
All right. Yeah, it's interesting. I think a lot of people are not aware that kind of the initial expiration date and the new. I think, going back to the example of wait and see, that kind of goes back to, hey, we literally just got the form that needs to be filed on the 31st over the weekend. So if that's any kind of indicator of wait and see, I think that's a pretty good one. But talk to me a little bit about who has to actually pay this and for.
Sure. So a lot of people aren't really familiar with this because they've traditionally maybe been in the fully insured group market with, a brand name carrier that whether it's a Blue Cross type entity, United Healthcare, Cigna, Aetna, whatever. And legally, when you're in a fully insured plan, that insurance carrier is required to take care of this. So that's why a lot of employers never see this. But over the past, say, 15 years, more and more employers have migrated to what's called level funding or a type of self-funding. And in those situations, it is the plan sponsor who's responsible for paying this tax. So we have found that over time, a lot of them didn't know about it and didn't really deal with it. And then, some of them got notified by the IRS that they should have filed and they've dealt with that. And a lot of it's flown under the radar. Also, with the level funded plans, some of the level funded providers actually did this for clients as a service. And so clients didn't really understand what was going on. They just appreciated that it was getting done. But some of them didn't do that. So it was up to the clients to do it. Now, with the ever increasing presence in the marketplace of ICHRAs, this has become a bigger challenge because employers maybe who had never offered group health insurance before and aren't used to these kind of taxes and who've been drawn to ICHRAs to provide some sort of benefit to their employees are being told they have to do this. And that's really why we understand all of you guys are here today. So once you're required to do this as any type of HRA, including ICHRAs, how do you do it? And that's what we're here to talk about today. I will say that there's a note here on the bottom of this slide about when you offer a fully insured plan, to an individual through an ICHRA, it's not the insurance company that pays the tax. Well, actually, they do. Let me clarify this. They actually do pay the tax on the people in their plans that have insurance, but the ICHRA still also has to pay the tax. So it's really kind of a dual tax in those situations.
Got it. Quick question for you, because I hear this come up in some confusion points sometimes. When we talk about plan sponsor, who are we talking about there? Plan sponsor.
So yeah. So it can be really straightforward when it's just a single employer entity with a plan. So my company, we're independent. We have a group health plan. We are the plan sponsor. It doesn't matter if we buy the plan from an insurance company or somebody, or a TPA, if it's self-funded. We are the plan sponsor as a single entity employer. Where it gets a little more complicated is when you're dealing with like union plans or Chamber of Commerce plans, which are known as multiple employer plans. Um, so in those instances, the plan sponsor is usually spelled out in a plan document. If
Yep,
it's not spelled out, then it's each individual employer. But you would always go to the plan document and for those kinds of plans.
understood. So, talk to me about, how to count covered lives and, this whole special rule for
Mhm.
HRAs and ICHRAs.
So this is a nice rule because it makes everything a lot simpler. So for other plans, for just like a major medical plan that you have at work, a group health plan, you have to count not only all the employees that are covered under the plan, but all of the dependents and spouses and things like that. So it can get kind of complicated, although there's some shortcuts available, but it's much more complicated. For HRAs, there's this really nice rule that you only count the employee participants, and nobody cares how many spouses or dependents might benefit under the plan. So that just makes everything a lot simpler. And
No,
that's for any kind of HRA, including at Force Icarus.
that's super helpful. And that is going to be a big change to your point. It dramatically simplifies, hopefully for everybody, how you actually count covered lives.
Hmm.
So talk to me about, there's obviously a couple different ways or counting methods available here.
Hmm.
Through these three, and which one would you say is kind of the go-to, and why do most people
Sure.
utilize that?
So you can see from the slide, we're obviously recommending the snapshot method, and I'll deal with that one third. Just real quick, the actual count method makes sense, but it's just kind of needlessly complex. You literally count the number of people covered on the plan every day, add add those numbers up for every day, and divide by 365. That gives you a really nice clean average. But who wants to add 365 numbers together? I mean, it just seems needlessly complex. It is allowed, but even the government knows that's kind of silly. The other method would be simple, which 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 is the Form 5500 method, because you only add two numbers together. You add the number of people at the beginning of the year, participants, I should say, and the number of participants at the end of the year and divide by two. The problem with this method is groups under 100 typically don't file 5500s. And in order to use this method, you have to file a 5500. So even though you don't get to use this real simple method, just be thankful you don't have to do a 5500 and if you have less than 100 participants on your plan. So having said all that, we recommend the snapshot method, which literally lets you use as few as four numbers a year and to come up with an average. And so typically what people will do is do like the first day of a quarter or the last day of a quarter or some other set day relative within the quarter. Add those four numbers together, divide by four. You could do 12, you could do one a month, and then divide by, 12 if you use the first day of every month, the last day of every month. But that seems like you're just adding complexity. So most groups that utilize this literally take one number a quarter.
Yeah, understood. So talk to me about an actual example of how the snapshot method works. I think this is really helpful. Theoretically we get it, but let's put some numbers behind this to see
Sure.
exactly how we calculate
Sure.
it.
And one of the things I did in creating this example is I used the last day of the first month, which isn't, as simple as the last day of the quarter or the first day of the quarter. But I did that to show that you do have plenty of flexibility in how you design this. You could literally do the 15th day of the first month of each quarter. You could, and the reason that that's, I guess, significant to most people is different people have access to better data on different time periods. So I just pretended like my little sample company here has the best data on the last day of each month. So we chose the last day of the first month of each quarter. And so we just did, put some sample numbers in here. And I used different numbers just to show some variance. But let's say this was a plan that was growing over the course of the year. So in the first quarter, we had 20, and every 20 participants. And then every quarter, our little company was growing, and we added 5 participants per month. So if I add all of these numbers up, I have 110 covered lives for the, 4 periods. Divide that by 4, you get 27.5 average covered lives for 2025. And I put this note down here. You can use fractions when you do the Form 720, or you don't have to. You could round this up to 28.
Hmm.
It doesn't really make much of a dollar difference. You're welcome to do it either way, whichever, just seems right to you.
Sure, that makes sense. So, this is the part I think that everybody's been kind of waiting for, which is we're going to actually take a look at completing the actual Form 20,
Hmm.
which we stated just finally came out over the weekend, and we all know that these are due on the 31st. But prior to kind of going over to the form, is there anything you want to walk through here specifically, or do you want to jump right to the form and let's take a look?
Just a couple quick comments. One, you can see from the headings on the little tabs, there's at least 8 pages on this form. You literally don't do anything with pages 4 through 7. You don't have to write anything on them, and you don't have to send them into the IRS either. So you would literally send pages 1, 2, 3. Page 8 is actually not even a full page. It's a payment voucher that you essentially cut off the bottom of a page. But your submission to the IRS will be 3 pages plus that voucher. And then the most important thing, because I'll say this 3 or 4 times, please, 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 please don't send this to the IRS without signing it. They will absolutely just reject it if it's not signed.
Yeah.
So, and the last thing I'll just say about it, because it's not addressed anywhere else in the presentation, it is possible, and you'll see references to this, but you can electronically file this forms, but the electronic filing process is pretty complicated. And so we're just really only talking about the most simple method here. So I
Mhm.
don't want to confuse anybody and, why are we not dealing with electronic? Well, because um, using electronic requires you to have some pre-setups with the IRS that most companies don't need to bother with.
Got it. Makes sense. Well, let's take a look at what that form actually looks like here.
Mhm.
Get this to toggle over. So like we said, this just came out. This is the updated version. You can see revised 2026 right here. So before we jump into this, the one question that we get a ton is quarterly federal excise tax
Mhm.
return.
Yes.
However,
So,
PCORI is not filed quarterly, it is filed annually.
right. So if you scroll through the first 2 pages of this form, you'll see so many different kinds of categories of taxes. A lot of them deal with fuel, some of them deal with hunting equipment. It's just kind of this catch-all of crazy kinds of taxes. And if you can see here where she's showing part 2, that's the PCORI section. But there's all these other things that are, in here. And one of the ones that is humorous to me, somewhere in here is arrows that are manufactured. I think tackle boxes used to be in this thing. So it's just a catch-all form for lots of different things. So a lot of these taxes are charged quarterly. It's just that PCORI is a annual tax, and the reason that the form references quarterly is because these other things are charged quarterly, or some of the other things are charged quarterly. But PCORI is just a once a year tax.
Got it.
So at the beginning of the form, one of the very first things you should understand is you're always filing this for the quarter ending 6/30/2026. And that's just when this tax is due. This is essentially the July reporting, which is due 30 days after, well, 31 days, I'm sorry, 31 days after the quarter ends. And if I was paying taxes on things like arrows, I would still be paying it by July 31st for the second quarter.
So
But
question, Trey, because we get this question a lot. If so, I want to talk about I'm an employer, I'm offering an ICRA. What dates should I pay attention to determine when my first filing is? Because we have the start of the plan year, we have the end
Mhm.
of the plan year, and there's a lot of confusion around this, and there's this whole idea of quarterly versus annual.
Sure, it's actually pretty simple.
Yep.
I'll always just focus on the end of the plan year. So my understanding is everybody listening to this call would have a plan year that ends on December 31st. And specifically, right now we're talking about December 31st, 2025. If you started a plan year this year, your first plan year was this year, you actually don't file this year. You file for the prior year for any plan year that ended at any time during 2025. So if your plan year ended December 31st, 2025, everybody's filing for the second quarter, June 30th, 2026, by July 31st, 2026.
Yep, that's a good call out. So I just want to reiterate that even if your plan year was 1/1/2025 and ended 12/31/2025, the first time you're going to file for PCORI is July 31st of 2026. So for all those who started your plan in 2026, your first filing will be July 31st of 2027. And I think that's just can cause confusion for folks because we do a lot of education around this. But it's all about when did your plan year end specifically, and that is going to indicate when your first filing is and ongoing filing. So talk to me about, let's walk through this form start to finish. You've done a really good job here of putting in a mock client, highlighting specifically the areas folks are filling out.
So on page one, the only entries are these 5 entries. And so you're putting the quarter ending there in the upper right corner, legal company name, uh, the physical address, and if you do have a PO box, you do need to consult the instructions on that, but you should have a physical address tied to this business. Typically, if you're using a PO box for business, it might be the physical address of your registered agent, but regardless, just follow the instructions on that. Um, tax ID number, city, state, zip. Pretty simple. Nothing complicated here. There's nothing else on page one of the form. So going down to page two of the form, we skip all the way down to the middle where it's highlighted part two here. And we're only focusing on really 2 lines on this form. IRS number line 133, and at the very bottom, line 2. And we'll get to line 2 in just a second. But line 133, you can see where it says, kind of near the top there, specified health insurance policies. That section is not for anybody on this call. That section is for Blue Cross Blue Shield or United Healthcare or somebody else that's offering fully insured insurance to people. And so they would have, 1 million people and paying that tax on those people. That's not you. You're paying it under this line, applicable self-insured health plans. And you either have a plan year ending before or after October 1st, 2025, and the difference is the rate. Now, again, my understanding is everybody on this call, your plan year's ending on December 31st, 2025. So we're really going to focus on that row D. And so on row D, the cost of this tax is $3.84 per covered life. And we're going to talk about covered lives in a few minutes and how to calculate this number a little more detail. But for now, let's just assume you had 10 covered lives on average for the year. The rate is $3.84 per. So your fee is $38.40 for the year. And so you can see for a lot of small businesses, this is a really, really minor tax. It's much more, of getting the form done is the bigger issue here, not actually writing, paying the tax. So you calculate the tax and put it in that column there that says tax, where the arrow is. And then you just pull that number down to line 2 at the very bottom of the form. Now you're done with page 2. So we'll go on to page 3. At the very top on line 3, we just carry the number from above. We go down to line 10. We carry the number down from line 3. So all those numbers should be the same. So we're, very simple. All these other lines really pertain to people who are making ongoing deposits, much like you would if you were having money withheld from your paycheck when you do your taxes. We don't have any of that with PCORI taxes. So these numbers are all going to look the same from line 133, line 2, line 3, line 10. It's the same number over and over and over again. So we're not doing any kind of electronic payment here or getting a refund. So we're skipping right down to the very most important thing on this page is the sign here section. And I'm going to go back up to the third-party designee, but I just want to start with sign here. Please, 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 as I said before, wet signature. You can put a digital signature on here using a PDF tool, but make it a signature. Just don't type a name. Also, there's no way if you use the form online to fill in the date using like a PDF tool. So you have to handwrite the date where it says that next to the signature. The rest of this form is, type friendly. You can type in, it's a fillable form through the IRS and you can fill all this out that way. Put the person's name, put the telephone number where the IRS could reach you if they have questions. I've never heard of them actually doing this, but there you go. Going back up to the third party designee, this is optional, and this is really only if you want to authorize the IRS to talk to somebody else about your form. Where I see this used is twofold. One, if like your CPA is filling this out for you, you would put their name there and the IRS can call the CPA on your behalf. If I do the form for you, I'm going to put my name up there if you want me to, and the IRS can call me so they don't have to bother you about it. But you can just check no. Where I've checked yes, you could check no and leave the rest of this blank. The
Yeah.
the PIN number that's listed there is just a number you make up, and it's basically a challenge code for the IRS. So if you told somebody you were going to make them their optional designee, you would tell them the code. If the IRS calls, they're going to say, "We need the code." And the designee may say, "Well, I don't know what that was." Well, they should. You should have told them what that was going to, and they probably have a copy of this form where they could reference that.
Got it. Understood. Seems pretty easy thus far.
Yep. And so now she's just scrolling through pages 4, 5, 6, 7. These are just schedules for people to figure out the amount of their tax that you don't need. So
Mhm.
this is page 8. This is the payment voucher. And if you scroll to the bottom, there's a section that we fill out, and you can see how it just looks like a payment coupon. And it's actually literally got a line where you can cut through it or, tear it off and send in with your check. The number 1 is just the tax ID number. Number 3 in the bottom left-hand corner, again, second quarter. I don't care when your plan year is, whatever, it's always second quarter for PCORI taxes. Section 2 is the same number we had in boxes 2, 3, and 10. $38.40. And then the very last part is literally just name, street, and address.
Awesome. Yeah, I think a lot of people, just I think the fear factor is this is brand new. Nobody likes filling out forms like this, but
And it's an 8-page form, and it looks crazy. And like, what part actually matters? And it's kind of hard to believe that you skip so much, but you do.
that is true. It is, and also when you look at this, it is kind of humorous where, the percentage of this that applies versus, what doesn't apply. Things like, there you are, arrow shafts, for example. So yeah, this is, Form 720 in general is a bit of a catch-all, but I think it's really helpful, Trey, you walking through the specific sections that do apply and the sections you can totally disregard. So I want to navigate back to our actual presentation, and talk about the actual filing instructions. So we went through
Mhm.
how do you fill out the form? Let's talk about dates, who this gets sent to, all of that.
Sure. So we have the address here at the bottom right-hand corner. It's the same regardless of where you are in the country. So that's pretty simple. If you don't get any of that wrong, just make sure you get the zip code right. That zip code will get it to the right place. So you're going to put your Form 720, the payment voucher, and your check or money order for the 38, whatever it was in our example, whatever your number is, to the IRS. You can just put in a simple envelope with a simple stamp, and as long as you make sure it gets postmarked by July 31st, you're good. Now, if you mail it next week, you're fine. It's going to get there before then. The postmark will be irrelevant. But if you're mailing close to the date, I would take it into the post office and have them hand postmark it. Atlanta is one of the areas where I am, is one of the areas where we're having a lot of trouble with our post office. And I know there's some other areas around the country. I might mail something today, it won't get postmarked for a week if I just leave it in the box. So, that's one I would caution you. Just make sure you get it postmarked by the IRS. Your meter postmark is not sufficient, by the way. Just by Friday the 31st this year.
Got it. Yeah, that seems pretty straightforward and totally agree. Again, going back to the fact that the new form was just released, I think a lot of people are going to feel like they've got less time. But it all has to do with, fill out the simple form and just be cognizant of the postmark date.
Mhm.
So talk to me about kind of common mistakes and, what we should avoid.
Yeah, so the first one is don't assume somebody else is doing this on your behalf because I hear that so much. Well, my insurance company always does this, or my CPA obviously does this because they do everything else. And this is just one that I see so often just flies under the radar and people forget. So, and again, it's not a huge dollar amount. So why do you want to mess with it? Just get it done. Um, the second thing is use the correct plan year end date. Now, again, from what I understand, everybody on this call is going to have a plan year end date of December 31st. But if they share this with somebody, just make sure whatever your plan year end date is what you're using. But regardless of what it is, you're using second quarter at the top of page one and on the payment voucher. But it does matter when you're calculating the rates. If your plan year end date is before or after October 1, it depends on what your per participant rate is. And then just make sure that you get it postmarked on time.
Mhm. And one thing I'll say, just to reiterate, is as a reminder, if your plan year end date, which on an ICRA at Savvy is always going to be 12/31, if your plan year end date for 12/31 of 2025, you're filing your PCORI fees for the first time on July 31st, 2026. For all those that may have started their ICRA in 2026, the first time you'll file is July 31st of 2027. So that's why that plan year end date is so important, because it's going to determine, hey, do I have to file, this upcoming 31st? Or am I good and I'll actually file in 2027? And then talk to me anything you want to call out specifically as far as accuracy on the form itself.
Well, one thing I don't think we addressed as we were going through the slides that I do want to comment on is the counting.
Okay.
And who do we actually count? So with most group health plans, you're covering everybody who is what's called a participant on under the plan. So anybody who, if you're talking about a major medical plan, obviously who is actually covered. If you're talking about a more traditional HRA, you're talking about anybody who's eligible to get a reimbursement. And ICHRAs are a little more complex than this. And so who do you actually count? Do you count everybody who could possibly get a reimbursement under your plan? Do you count the people that actually do get reimbursements? And the answer is probably somewhere in the middle of those two things. What I recommend is that you count everybody who verified to you under your ICHRA that they were eligible for reimbursement because they have individual insurance for one or more months during the year. So for under most plans, there has to be some sort of certification that I'm eligible for reimbursement because I have individual insurance, and here's maybe my substantiation of that coverage. That individual now is a participant. You should count them. So if you have 100 people in your organization and all 100 could be eligible for reimbursement under the ICHRA, but only 5 actually submitted, certifications that they were eligible because of their individual insurance. I would only count those 5, and that's the only ones that I would pay the tax on.
Got it. Makes sense. So in true fashion, we've done an amazing job, and thank you so much, Trey, for walking us through. Hey, everybody's now equipped to be able to do this on their own, but absolutely understand that a lot of HR folks, business owners view this as an additional thing on their plate. So one of the big reasons why we've partnered with Admin America is it allows us the opportunity to allow our clients the easy button to outsource this if they're truly in a situation where I definitely want to understand what it is, but I don't have the bandwidth to take this on. So our partnership with Admin America outlines what the key services are that they provide, and then the corresponding fee that they charge to file this on your behalf. Very easy process. A lot of folks that are watching this today are engaging in this already. You're getting emails from partnerships at savvy.ai that are walking through when this is due. Here's the new form. You obviously clicked on this link from the email. But if you are somebody who falls into the bucket of, I just don't have time for this, I don't want to do this, no problem. We ultimately just need for you to respond back to the email you received. We get you in touch with our points of contact at Admin America, and they make it super easy. No stress. They'll take care of it on your behalf, and you don't need to worry about it.
Well,
Um,
other than writing the check.
other than writing the check, exactly. Um, I've got a couple questions, Trey, that I want to ask that have I've seen come up recently. One of the things that you can do with an ICRA for small groups, so non-applicable large employers, meaning you have less than 50 eligible employees, is something that we just really refer to as an unaffordable ICRA, where the employer may do something like offering a dollar contribution. And they're doing this because they may have a population that has the ability to qualify for a lot in premium tax credits. But the reason why they want to utilize the ICRA compliance chassis is to engage in the special enrollment period that you achieve by offering an ICRA. So in this hypothetical situation, the employer has offered a dollar contribution. The employees make the decision to waive the ICRA and instead pursue premium tax credits. How would that type of client handle PCORI fees and do they apply? Because yes, they're offering an ICRA, but nobody's actually participating in the ICRA. They've all waived it.
Yeah, so go back to what we were just talking about kind of at the end of the presentation about how do we count covered lives. And so if we're only counting individuals who have certified that they have purchased individual insurance and want to be reimbursed, essentially under what you've just described, you would have zero participants.
Mhm.
So you are not required to file a Form 720 to show zero tax. It's kind of like with your personal taxes, you don't have to file a 1040 to show that you had no income. You
Mhm.
only have to meet a threshold. Well, with Form 720, the threshold's only one person. So if you had one person take it, you would have to file showing the one person and pay the tax on the one. But if you have zero, there's nothing to do, nothing to file.
Got it. So hypothetically, I'm a business owner that offers this. It's always pretty obvious, who the business owners are. They historically are not necessarily going to qualify for premium tax credits, so they may opt into the ICRA in order to get the pre-tax advantage of that. So in that scenario, I'm an employer who am also considered a W-2 within my company. I'm the only one participating in the ICRA, therefore I am filing PCORI fees for one person, which happens to be myself.
Yeah, so it's going to cost you about $3.80 plus the cost of a stamp. You
Yep.
know,
Yeah, that's super helpful. I know we do have some questions on that at Savvy. We work with large employers as well as small employers and doing everything from affordable to unaffordable ICRAs in specific cases where it makes sense. So I think kind of providing clarity on that can be really helpful for those folks that engage in some of those more non-traditional kind of strategies. Um, Anything else to add, Trey? I think we did a really good job of walking through how folks can actually take this on in manage it, as well as, hey, if you're just not interested in doing that, you can outsource it to us. And the only requirement on your end, to your point, is the actual check itself.
yeah, I think that's my only practical comment is this is not an area of high stress for the IRS. You're not going to do it wrong. So I don't want to discourage anybody from just trying to do your own Form 720. If you get your calculation number slightly wrong, the IRS isn't going to do anything about that. Um, they're just looking for essentially good faith compliance. And, I've never had a client come back and get a penalty because they did their Form 720 incorrectly, except for lack of signature. That truly is the one issue. You have to accomplish that.
Got it. If there's one thing you're getting exactly correct, it's send the check, postmark it, and sign the form.
Yeah.
Awesome. Well, Jay, super appreciate you taking the time. I know I got a heck of a lot of value out of this. I know everybody watching will as well. And just a reminder, if you have any questions, if you do in fact want to outsource this, reach out to partnerships at savvy.ai. We've obviously already been reaching out to everybody, educating, making sure they're aware of due dates. But thank you, Trey. This was super awesome. Really appreciate the time.
Thanks, Mary Margaret. It was great to be with you.
You too. Bye bye.
Bye.